Hello, chart watchers. Welcome to the Decision Point Show with your hosts, Aaron and Carl Swenlin. We're happy to have you here, and we have lots to talk about for sure. We do air every Monday at 5 p.m. Eastern, so I hope you will join us every Monday for our show. Let me go ahead and bring in Carl, my dad. How's everything going?
Everything was great.
Excellent.
Enjoying watching a down day for a change.
Right, with our bearish bias, right?
Right.
Exactly. All right. Well, great to have everybody here with us. I do want to let everyone know that the question box is actually open if you are watching us live, and I'll try and moderate those and get some of those questions answered at the end of the program if we have time. So feel free to add them in there. So let's go ahead and look at our agenda for today. We did get some new sell signals on our scoreboard indexes, so I'm going to talk about those and show you some charts. We will actually start, though, with the weekly wrap highlights. Carl's going to go over some of the comments he made at the beginning of his weekly wrap from DecisionPoint.com. And then I want to show you how to join our free email list so that you will always know when we get signal changes, because I will notify those who are on our free email list. So you'll want to do that if you aren't already a subscriber to DecisionPoint.com. And then our bonus, of course, Carl's grab bag. And like I said, if we have some time, we will try and answer some of your questions as well. So let's go ahead, and I'm going to pass it back to you, Dad, unless you want me to pull up your weekly wrap. It's
No, I'll get it. I'm sort of
ready to go.
Yep.
Perfect.
Okay. Last week, my conclusions, pardon me for this, it's meant to have it set up differently, but here we go. On Friday, I said the trend is up and market condition is overbought. The theme I've been following is that the market is in a parabolic advance and that it is doomed to break down and correct eventually. As for when that will happen, we currently have an excellent setup for putting in an important top, which I covered earlier in the letter. Also, we've got a downside initiation climax today, and intermediate term indicators are overbought and topping. As for how it will play out, I think that the early 2018 event is a good example of the kind of thing that I expect. And here's what I'm talking about. Here we had a parabolic advance and broke down. We had a 10% correction. One of our readers corrected me and said, this is not really a parabolic. And in one respect, I'll agree. It doesn't look like this. It's not as, I could fudge it, but basically this advance is so steep, it's very much like the end of a parabolic. And it's been going for 4 weeks. Whereas this parabolic from the flat part to the steep part was 5 weeks. We've had 4 weeks of pretty much vertical advance. I mean, yeah, it doesn't look vertical on here, but for all practical purposes, it's the steepest advance we have on this 3-year chart. And so what we do expect is for this kind of thing to eventually break down. Do I know when it's going to happen? No, but it's like, as I said, we had a fairly good setup for it. But look, all along here, we've been looking, it's been getting more overbought, and I've been, looking for a top. What do you do with that? You just have to be aware of that kind of expectation and adjust appropriately. I don't have an answer for every person.
Well, I do have to say we did get a question. How low do you think we could go on a correction here?
I don't know. I honestly, let me go to another chart here. No, not that one. Not that one. This one. This this is what we got, a nice gap down today and went outside the rising trend line, went below it. But look back here, we had another similar type day, you know, a nice down day followed by a gap down. And in this case, we got a hammer candle. This one is not a hammer. So, but I don't know what to make of this in terms of how much more we're likely to get. We've been getting this kind of stuff, maybe a little more activity here, but it's so brief, so shallow, and I have no idea if it's going to go this way again. But let me update this chart. See, I get the okay. Not a huge amount of volume, but still better than the 1 year average of total volume for the S&P 500. But here we've got
VIX. Look at that VIX.
Yes, totally dropped down. I don't have a good example. This is probably the closest right here. So this could be the end of it. We had the penetration day, and now it's down below the lower Bollinger Band. So
yeah, it looks like that squeeze kind of played out like we were looking at, you know,
yeah.
when those bands squeeze together like that. That's been bothering me for quite some time.
Yeah, it'll take a long time, and it never got as tight as this. But yeah, that's what that looks like. Anyway, as far as how far down, it's just anybody's guess. But I mean, what I would like to see is a 10% at least, something to get people a little excited. Let me go back to this, and I wrote a short article at the beginning of the weekly wrap, and it has to do with market cap and of the S&P 500. Well, the top four stocks in market cap are Apple, Amazon, Facebook, and Microsoft. And those four stocks compose 18% of the S&P 500. And that's unreal. I mean, it's just,
I know.
Yeah. I used to track on a fairly regular basis the market cap and for the S&P 500 and components. And when I was doing that some years ago, the top 50 stocks, which is 10% of the index, usually represented around 50% of the market cap. So it's pretty heavily weighted.
Absolutely. And then I know I talked about it, I think on our last show or in an article, I don't remember, but you know, one of the things we're looking at the cap weighting on the S&P, it's the whole thing. But, you know, even with the sectors, you know, those sector spiders, there is cap weighting on those. And you might end up, if you want, for example, XLE, if you buy that, you better like Chevron, you better like ExxonMobil. All of these are huge holdings in those particular spiders. So good idea to be aware of what those weightings are. But we did talk about it, and I know we have it in some of our chart lists at StockCharts that we do follow the equal weight sector. So they're based on those sector spiders, but they're equally weighted.
Yeah, and while I've got it here, I wanted to cover that, but before I go from this to that, I wanted to point out, see, we've got these parabolic moves on 3 of these charts. And they said, like Apple, this is just gross. I'm sorry.
It's unreal.
We had back here less than a year, well, a little over a year ago, a 40% decline. And I forget now, but I think this is like 100% advance. It's something pretty, maybe it's 80%, which is, you know, it's bizarre is what it is. I'm not happy with it.
I know, right? Yeah, the only one there that looks halfway decent is Amazon, I have to say.
Right. That's the weird one in the bunch. And
Hmm.
that could be another breakout. That this could be a what? A continuation pattern.
Yeah, yeah, that
Yeah.
symmetrical triangle, but
But this is a
still
crack
pretty
too here.
overbought.
This kind of stuff is, that's just it's gonna
Dangerous.
crash on people. Yeah. Now the equal weight index, it's RSP, is the symbol, the equal weight S&P 500. It's actually been behind. Normally, the equal weights go ahead in a healthy market. Let's put it that way. They'll move faster than the cap weighted. Here's SPY, which is cap weighted. It from this low back here, it went up 18%. The RSP only went up 17. So this is out of whack, folks. It's just it shouldn't be this way in a bull market. And by the way, if you check it, you'll see that in a bear market, especially at the beginning, the equal weights will go faster down than the cap weighted will, just because the smaller cap stocks usually go down faster. Okay.
All right. Yeah,
Have
I'm
you,
working on there's, I know we have an advanced decline chart and volume, on volume. So somebody had asked about, there's a large divergence, I guess, between advancing and declining issues and advancing declining volume today, intraday.
okay. I'm not sure I could find. Oh,
Yeah, I'm
intraday.
going to try and put together a chart so that you can look at it at the end of the show.
Well, I don't know an intraday version of that. Never did that.
Yeah, I can set that up. He's using dollar NYAD versus dollar NYUD
Okay.
on a 5-minute chart, I guess. But
Huh. Okay. That's something I've ever tried.
mm-hmm. All right,
Okay.
so go ahead. I'm gonna get that.
All right. Well, did you want to?
Oh
Oh,
yeah, let me go ahead and I'll share some information about our new signal changes. I'm actually still in the middle of annotating them in, so I'll do that kind of real time with everybody. So hold on right here. All right, so on the signal scoreboards, we follow the S&P 500, Nasdaq 100, OEX, and of course the Dow. And these are the actual indexes and what the signals are. We generally write about the SPY, but for the general public on StockCharts, we figured we'd just use the indexes themselves. But the main point I want to make is that today, all 4 of these indexes generated short-term PMO sell signals. I've kind of been looking for this to happen, but with a gap down like today, it was pretty much a quick and easy one to spot. So let's go ahead. Here's the Dow chart and the PMO. And there's that drop below the signal line. That is what triggered that signal. Look at the OBV volume here. That decline. We've got some serious declining volume here, and it is starting to take the OBV down quite a ways. And notice also the ascending triangle pattern we're watching. We got the breakdown. It's well below that rising bottoms trend line, and I think you'll see the same on the others. There's your NASDAQ 100 and just triggering that sell signal as well. The OBV, though, I have to say on the NASDAQ 100, not quite as ugly, just because we haven't had the same type of readings, the up to down volume. On the OEX, here's that other signal change. Again, not too much of a problem with the OBV, although if you look at the thumbnail, you can see that we're below that previous bottom. So that's not good to see at this point. And finally, the chart that everybody's waiting for, and I'm going to go ahead and annotate this. I need to stretch these out, and I think it's a good a good way for you to see the significance of this particular breakdown. And there's our rising wedge right there. And then there's the breakdown. Now we closed, it looks like we're closing. I'm going to thin that line out just a little so I can see it, but it looks like we did close right above that rising bottoms trend line. Let me just make sure, let's make it as accurate as possible. There we go. Exactly. So we did end up with not only that penetration, but a close below that rising bottoms trend line. So we broke that trend. And seeing the PMO sell signal at the top of the zone is certainly not encouraging.
Did you see the gap in December, the up gap, right towards the end of December?
Ah, here.
Yeah. So there, I think that plus the lows moving to the right, and I think that's a support level. That's a visible support level.
Go get that auto support and resistance line in there. Yeah, and there's the top of that gap, and then if I do another one here, bring it right to the bottom. So there's your gap, and typically, it needs to either hold that gap support, or if it decides it wants to close that gap, that's going to bring price below the 50-day EMA. That could be quite a problem. I'm not so sure we'll get a breakdown that far, but we will watch that gap because typically they do close. All righty. So those were the four that I wanted to show you. There's also one other signal change I didn't mention that just came in today, and that is on the USO, United States Oil Fund. And here is that signal, the intermediate term trend model. We had the 20 drop below the 50-day EMA. So that triggered the signal. It is a neutral signal because the crossover occurred above the 200-day EMA. So as long as the 50 is above the 200, we kind of consider that particular stock index, whatever it is, to be in a bull market configuration. And so typically when we get these declines like this, these negative crossovers, above that line, we assume into a neutral position, which is being in cash or fully hedged. So that's what that neutral signal means. But man, we've seen nothing but disaster here.
Yeah, look at the crash on the oil prices. That's just amazing.
Crazy. And you can use the annotation.
The rationale behind it is that with these coronavirus, that a lot of lower demand on fuel because of a lack of people using the transportation.
Yeah, it's a huge drop. The support levels aren't really, you're not going to see those until we get down here to $10.80 maybe. You could get lucky at about $11 here, but this is really the primary support level all the way down here below. Looks like about 10.50. Ugly OBV. And there's WTIC, and we're getting closer to the support level here, it looks like, with West Texas crude. So that could be good. That could help. All righty. So those were the changes I wanted to go over. I'm going to pass it over to you. And actually, hang on. I just got, our friend just sent us a chart that he was mentioning. So I will bring that right over here. And so here are your intraday divergences here. That's the AD volume. And of course, that's your advancing and declining issues. That's a pretty huge one.
Oh, I see. Yeah, I see what you're talking about.
Yeah. That's pretty interesting.
Yeah, it is. But obviously the volume is where most of the down moves are picking up more of the volume. You see what I'm getting at? And advanced decline, it could be a penny or a dollar or anything, anything.
Right. Exactly. It's just a matter of, is it advancing? Right. Is it declining? Mm-hmm.
But I don't take that difference in terms. I don't that up slope of the advanced declines. I don't take that as a positive.
No, no, I would definitely not either. Interesting. Okay, I'm going to pass the screen to you, and I know you had a few charts you wanted to talk about in your grab bag.
Okay.
And yes, if you do come and watch us live, we do have those question boxes open now, so you can ask us questions if you are watching live.
Oh, I'm having trouble here using the wrong pull down.
I do that all the time.
Okay. What I wanted, one of the things I wanted to show is we'll talk about it was analog versus digital. When I used to work, when I was in the Air Force, I was duty officer in the Airlift Command Post, and we launched and recovered airplanes and recorded times, etc. And for recording times, there's nothing better than a digital clock because you don't have to think about it. You just look up and write down the numbers. You don't have to identify with the time at all.
Mm-hmm.
But if you really want to internalize what's going on, you look at the analog clock with the hands and the dial, and you look at it. You don't have to actually visualize the numbers. You look at the clock, you can say, well, I know it's mid-afternoon, and I know I have a feeling, and I have a total orientation about what that means. Even though I don't have the numbers written, I don't have the numbers in front of my face. Does that make sense?
Yeah, it does to me.
Okay. Well, the other day it was the consumer sentiment came out, and it was 99 point something, and I thought, well, that seems pretty high. I wonder, but I had no idea. I don't carry that chart around in my head. So here it is, and well, it is pretty high for recently, but back in the beginning of the century, it actually got higher than that. But it just gives you an instantaneous concept of what that means, and you can't do that with digital charts. Digital charts. Well, one of the things I would claim is that okay, I'm gonna move something out of the way here. I'm trying to find the chart that I'm looking for, and I can't. But anyway, it's when you switch from linear charts to log charts, semi-log. To me, a log chart's more digital than it is analog because you really have to orient yourself and am I making sense?
Yeah,
To
absolutely.
really understand what it means. So I'm a totally analog guy.
Well, I know we do get the questions too about the analog versus the log, chart styling, and trend lines and the differences. And I know that the two of us have always been a proponent of not using a log chart because it gives you kind of the actual, I don't know, the actual price levels in terms of drawing your trend lines. It just, it works better for us.
Right.
Same sort of thing.
Okay, let me shift gears here a minute to something else. A couple of things on this chart. This is our new Silver Cross Index, which means the percentage of stocks in this particular case, the Nasdaq Composite, whose 20-day moving average is above the 50-day moving average. And a couple of things to notice here. When you see this kind of a upswoop, this is what I could call an initiation impulse. And it means, it's just a really strong upswing from this low here. And it's really important because it's probably telling you that we've got a new bull market starting or a new up leg anyway. we have something similar. We don't have any much history on the Silver Cross, but the bullish percent, we have something similar here. And that gave us the initiation impulse, the signal that the bull market was starting again finally. Notice in here, we did get some of an initiation impulse, but it's kind of stalled. And I just attribute that to the peculiarity of the point figures charts and how you get buy and sell signals off of them. They're just different. I think these are a little more understandable. Your regular bar charts are more understandable in the what it takes to.
Yeah, you can really see those initiations.
Right, and I'm not saying you shouldn't use point and figure. A lot of people use them and get lots of valuable information from. It's just that I, for something not quite as arcane, that's where I would use. Again, they've been used for many years and certainly have their use. Here's we were talking about SPY versus RSP. The R is for Ridex, which of course is no more. Invesco owns this fund now. But notice here's the equal weight coming off of the 2016 lows. Here we had 25% versus 22. That's more typical, and that's what you would expect. But from here, from to this top over, from there to the most recent high, 83%. I'm sorry, 85% versus 95% for the. So that's showing you how the large cap stocks, the heavy weighted large caps, are really zooming upward, like we saw with the S&P 4.
All right. I did get one question. I don't know unless you wanted to show another chart.
No, this is good.
Gold. What are you thinking about gold?
Gold is, I'm liking it. And it is on a buy signal.
Yes, it is. I'll be writing about it today in the DecisionPoint alert for our subscribers. Speaking of which, I'm going to steal the screen and go really quickly, show people where they can sign up for our free list. There we go. So decisionpoint.com. And right on the front page here is a place for you to sign up for our free newsletter. And you get notifications of when we publish for free elsewhere. And when we have new videos that come up, you'll get a notification of that. So certainly subscribe to our free newsletter. But if you want to know what's going on with the dollar, gold, oil, and bonds every day, Monday through Thursday, I write the DecisionPoint alert. I only used to write it once a week, so now you can get it 4 times. And then Carl has moved his weekly wrap to our DecisionPoint site. So be sure and check us out. I don't want to make a big sales pitch, but hopefully you've been there and you can get more information on gold definitely this afternoon. Thanks, everybody, for joining us. Remember, we do air every Monday at 5 p.m. Eastern. Happy trading.